This video is for educational purposes only, not financial advice. Always consult a certified financial advisor before investing. We are not affiliated with State Street or any ETF provider. What if your investment paid you every single quarter, forever? Not by selling stocks, not by trading every day, but simply by owning shares of powerful American companies. Today we are breaking down SCHD, one of the most popular dividend ETFs in America, and why so many investors in 2026 are using it for passive income and long-term wealth. Welcome to ETF Holdings USA, the only channel that breaks down every holding inside America's top ETFs. Today's ETF, SCHD, we will cover what SCHD is, who manages it, ALL Holdings Beyond Top 10, Dividend History 2026, Expense Ratio, SCHD versus SPY versus SPY, Future Outlook 2026, Should Beginners Invest? Let's get started. SCHD stands for the Schwab US Dividend Equity ETF. It tracks the Dow Jones US Dividend 100 Index. In simple terms, SCHD invests in around 100 high-quality American companies that consistently pay dividends. Unlike growth-focused ETFs like QQQ, SCHD focuses on stable businesses, strong cash flow, reliable dividend payments, long-term financial strength. SCHD officially launched on October 20, 2011, and since then it has become one of the most popular dividend ETFs in the United States. SCHD is managed by Charles Schwab, one of the biggest and most trusted investment firms in America. Schwab is known for low-cost investing, retirement accounts, ETFs and index funds, long-term investing tools. That reputation is a major reason SCHD has become so popular among dividend investors worldwide. Most people only talk about SCHD's top holdings, but the ETF is much broader than that. Here at ETF Holdings USA we go beyond the top 10. SCHD owns 100 dividend-paying U.S. companies across multiple sectors. Finance, Morgan Chase, BlackRock, U.S. Bancorp, Truist Financial. These companies generate strong profits and regularly return money to shareholders. Telecom and communication, Verizon, Cisco Systems. These businesses are known for steady revenue and reliable dividends. Healthcare, ABBV, Bristol Myers Squibb, Merck, Johnson & Johnson, Pfizer, Amgen. Healthcare companies are important because people continue needing medicine regardless of the economy. Consumer, Coca-Cola, PepsiCo, Altria, Home Depot, Walmart, Procter & Gamble. These are businesses millions of Americans use every single day. That creates stable long-term income for investors. Energy, Chevron, ConocoPhillips. Energy companies often pay strong dividends because of their massive cash flow. Industrial and technology, Lockheed Martin, Texas Instruments, IBM. These companies combine stability with long-term business strength. So while SCHD may not be as flashy as tech ETFs, it is filled with companies that have decades of profits and dividend history behind them. Why SCHD is different from EO and SPY. This is where SCHD becomes really interesting. Unlike FU or SPY, SCHD specifically focuses on dividend-paying companies. FU and SPY focus on overall market. Higher exposure to tech giants. Growth focus. SCHD focuses on dividend income. Lower tech exposure. More mature stable companies. Quarterly dividend payments. So if FU is mainly about growth, SCHD is more about income plus stability. That is why many investors actually combine both together for the perfect portfolio. Dividend history. One reason investors love SCHD is its dividend growth history. SCHD has consistently increased its dividend payouts every single year since 2011. That means investors are not just receiving income, that income has historically grown year after year. In 2026, SCHD dividend yield is 3.5 to 4% annually. That is significantly higher than most broad market ETFs. And because dividends are paid every quarter, investors can create a steady stream of passive income. Expense ratio. Another major advantage, expense ratio, 0.06%. That is extremely low. If you invested $10,000 in SCHD, your annual fee would only be around $6. Low fees matter because more of your money stays invested and compounding over time. SCHD versus BOO versus. Let us simplify the comparison. SCHD, dividend income focus, stable companies, higher yield 3.5 to 4%, lower tech exposure, expense ratio 0.06%. BOO, tracks S&P 500, balanced across all sectors. Great for long-term growth, expense ratio 0.03%. SPY, also tracks S&P 500, most heavily traded ETF, popular among traders. Expense ratio 0.09%. Simple breakdown, the SPY equals growth, SCHD equals income plus stability. Who should invest? SCHD may be a great choice for passive income seekers, people who want regular cash flow from their investments, retirees, investors looking for stable income-producing assets, long-term dividend investors, people building wealth slowly through dividends and compounding. SCHD is especially attractive for investors who prefer steady returns over high-risk growth stocks. Future Outlook 2026. Looking ahead, SCHD future depends on the strength of large American dividend-paying companies. If markets become more volatile in 2026, many investors may rotate toward safer companies, cash flow businesses, dividend-paying stocks. That could continue helping SCHD stay popular and grow. However, if high-growth tech stocks dominate again, growth ETFs may outperform in the short term. Should beginners invest in SCHD? For many people, yes. SCHD offers diversification, passive income every quarter. Very low fees, 0.06%. Stable, proven companies, long-term investing potential. But beginners should understand, SCHD is more focused on income than explosive growth. It may grow slower than tech-heavy ETFs during strong bull markets. Still, for long-term wealth building and income investing, SCHD is a very solid option. To sum it up, SCHD is one of the most popular dividend ETFs in America, low fees, strong companies, and growing income every quarter. Now the big question is, would you rather choose growth with VO or QQQ? Or income with SCHD? Comment below and let us know. If you found this breakdown helpful, hit like and subscribe too. ETF Holdings USA new ETF breakdown uploaded daily. See you in the next one. Educational purposes only, not financial advice.